Getting into, the structure of a captive, I like to use the 3 layers of what it is: the mine layer, the ours layer, and the theirs layer.
Okay.
But before even getting to that, think about being fully insured, right? We liken fully insured to renting your insurance. Right? So I was talking to my college friend last time. Remember when we would rent our apartment, right? We'd pay rent, and if we took care of the apartment, did they give us any money back? No. Our rent, just what happened next year?
Went up.
Right? So that's what health insurance, buying fully insured health insurance is like. It's renting your insurance. And that layer is theirs. We're giving that money away. We're transferring our claims, we're transferring our risk, we're transferring our opportunity to the insurance company. That's the one layer, theirs. When you talk to self-funded groups, or when you're looking at a self-funded group, there's another layer. There's the theirs layer, right? We're still transferring risk, we're still transferring opportunity, we're still transferring claims to an insurance company. But we've introduced the mine layer.
Okay.
Right? So most self-funded employers become self-funded because they want the mine. They want the opportunity. They want to win. They know that I'm going to be better off long-term if I have the opportunity to win versus renting my insurance. What the captive does is it introduces the ours layer. So we have the mine layer, which is exactly like being a self-funded group. We have the theirs layer. We're still transferring catastrophic risk. But the ours layer sits in between the two.
Welcome to the Self-Funded with Spencer podcast. Healthcare is broken, and we aim to fix it one conversation at a time.
Howdy ho, neighbors. Spencer Smith, host of Self-Funded with Spencer. Thank you for tuning in. You are here to listen to episode 48 with Stephani Manning of Innovative Captive Strategies and or ICS. We love our acronyms in insurance, don't we? But Stephani came on the show to help me further explain the subject of captives. I think we can never have too much emphasis on what captives are, to teach the marketplace what the benefits of this possible solution are for small to mid-sized employers. And Stephani probably does the best job, I think, of anybody so far, although my other, obviously, partners that have come on to explain captives did a great job of explaining it as well. But she does a phenomenal job of distilling down the layers and what they are. So specifically, the simplicity of what the 3 layers of a captive are. She does a great job, draws an analogy that I think is brilliant. I just immediately clicked into my head, oh, I get it. So those of you that have having trouble sort of continuing to wrap your head around a captive, I think Stephani will help because she's a teacher at heart. One of her colleagues was actually down here with her and just said, really at the end of the day, Stephani is a teacher. And I think that comes through in the conversation we have. So she's been with ICS with 15 years. She grew up in Iowa. I joked with her about corn and the Des Moines Menace. For those of you soccer fans out there. And we talked about her favorite books. We talked about quotes. We talked about, her kiddos and what she sort of suspects they might do in their life, which was kind of funny. But she's just a very smart, very likable, very charming person. Does a phenomenal job of explaining the subject matter in a way that people can simply understand. I think you're really going to enjoy this episode. Those of you watching on video will actually notice it's in a new location. We had a snafu with scheduling, and I had to really quickly reschedule us on a new location. I think it turned out great. So thank you so much for the people that continue to tune into the show. Thank you for the folks that have interest specifically in captives. I'm here again with Stephani Manning, episode 48, Innovative Captive Strategies, Spencer Smith, other stuff. Enjoy. Thanks, guys.
Kick it off, though. So, Stephani, you're with Innovative Captive Strategies. You're an SVP/shareholder. I want to make sure I get that correct as well. So, great to have you. Thanks for coming in from Des Moines, Iowa, of all places. I expected maybe some corn. Like I expected there'd be a gift of corn.
A stereotype.
I know.
Although my husband does sell corn. So
does he really?
Yes.
So it's not a stereotype.
We couldn't be more suburban, actually. And I joke, and this is not a fun fact for most people, but it is a fun fact for me that since I was 5 years old, I have lived within a 10-block radius in Des Moines, with the exception of college and studying abroad.
Okay.
So I clearly like my bubble.
There's something about the cornfields that just draw people back in, right?
Des Moines it's the best kept secret.
Is
it's
it?
not as much of a secret anymore. It's surprisingly an insurance mecca.
Okay.
It's a great place for young professionals. It's a great place to raise a family, quality of life. We don't have commute times, great neighborhoods, great schools. So it's a great place to live.
Well, I've actually been there. So the only other thing outside of my stereotype of corn in Des Moines in Iowa is Des Moines Menace soccer team. Yes. I used to play soccer in college, and in the summer there was a league called PDL, which is like Premier Development League, so college kids could play without jeopardizing their eligibility.
Yep.
So I played in the Des Moines Menace Stadium where it was like 3,500 people in this packed house, and I'm like, wait a second, why are there this many people at our soccer games? This is ridiculous. But I guess it's because that was like the draw in Des Moines, Iowa from sports, right? Have you been to a Menace game ever? Or?
Even better.
Okay.
I technically kind of worked for the Menace.
Did you really?
So, yes, the owners of the Menace team, not only are they a longstanding captive client, but my mom worked for the owners for 37 years, her whole career. And so Menace was a part of our upbringing. So we had to go to Menace soccer games and
Well, see, I knew it was popular, and when I'm looking around, and I joke because we'd have 10 people show up to my college soccer games, like it's everybody's parents was there,
Right.
And then like it was this packed house with music, and people were celebrating, and there was all these, everybody had swag, and I'm like, what is this? This is incredible.
I still don't understand it.
Okay, well, and there's even some guy that actually was getting paid to play too, and we were just astonished that somebody was like on salary playing there, and so anyways, so that's the other thing I know about Des Moines, and we won't make the whole episode about Iowa, but let's know more about you, Stephanie.
Yes.
I want to hear some of your backstory. We already, know where you live for most of your life within a 10-mile radius. You did mention college and abroad, so I'd love to hear kind of your full backstory.
Absolutely. So I obviously born and raised in Iowa. I did go to University of Iowa, go Hawks, for my undergrad. Graduated from the business school with a marketing degree. And then I did go on to get my master's from the University of Iowa pretty early on in my career at ICS. So I'm obviously loyal, I think is what you're seeing here.
Well, so where did you study abroad, though? You mentioned going abroad.
Went to London.
London,
So,
okay,
yes,
yeah.
London, and did that for half of a summer, and it was a great experience. My maybe only regret is that I wish I would have lived somewhere different than Des Moines, even though I love it. But just getting that experience was awesome.
Well, so I'm not too dissimilar to you. I'm not quite the same radius, but I grew up about an hour south of here, and so my only tenure away from Texas was my trip to Springfield, Missouri for college and things like that. But then, of course, as soon as I came back, and my wife was like, "I don't want to stay in Springfield too. Like, what do you think about going to Texas?" And we said, "Sure." So even though it's maybe about an hour and a half commute to my parents, I'm a Texas
And that's the thing.
guy.
We kind of come back home to our parents. They help us raise our kids.
Yeah, I know, right? Like we got both grandma and grandpa.
Yes.
They're able to help with kiddos. So speaking of kiddos, you got kids yourself?
I have 2 kids. I have an 11-year-old son named Gus and a 9-year-old daughter named Murphy.
Okay.
Popular pet names that I've turned into kid names, and my colleague Sarah's here. She actually has a son named Gus as well. So we share
how
that.
did this happen? Was this like intentional?
I
Did we
like to
plan
say
it?
I influenced her
You
because my kid's
influenced.
11 and her son's 1. So
Oh man, well Gus. So Gus, is it Gus short for anything? Or
it's
is
not.
It is.
It
okay.
is for Sarah, but not for me. We talked about August, and just Gus just felt right. And he's if you meet him, he's such a Gus, and I don't know what that means, but to us, he's just such a Gus.
Like one of our dogs, he's a wiry looking old dog, and his name is Marvin.
Yep.
And we just he's like he looks old. He was a puppy and he looked old. He's Marvin to us.
Yep.
So I get. So do you call him Gus though? Isn't there like
Gus the bus, Gus
the
man,
bus.
yeah. I mean it all. So yeah, he's a good kid, lots of personality, super athletic.
And then Murphy, is that this is Holmes Murphy? Did
I
that,
know,
like I mean,
no,
is that
no,
was that
no.
intentional too? Right? I feel like
No,
there's
she's like not the mascot, although she
Okay.
thinks she is. Murphy is actually though. We came up with a name from an intern that we had that I just loved her, and just we loved the name, and she's such a Murphy, right? So sweet and kind, and just a great girl, and we have a great family. I've been married for almost 17 years, so got married pretty young, and yeah, we have a great little family, love to travel together, and
Well, do you think they will venture away from Iowa? Have they got indications that they want to travel a little bit themselves? I know they're young.
yeah, no,
but
we make predictions with our kids all the time.
yeah, for
so
sure.
my prediction, and now it's recorded.
Well, yeah, it's going to be on air.
Yes,
Yeah,
on air.
Yeah.
I predict Gus will move far away from us.
You think so?
And I predict Murphy will live in our basement.
Oh, that's funny. I'm curious when they hear this 10 years later if the prediction was accurate.
I
right?
know. Well, I'll circle back.
Okay, yeah, please let me know. So I read an interesting quote. I always like to dig into people's backgrounds, just so the people that are listening here today, this is our first time to meet each other, which is always fun. So I go, all right, I'm going to investigate a little bit about Stephanie, maybe come up with some interesting questions. And I discovered a quote that was associated with you that I want to ask you about, which is, I'm going to make sure I read it correctly.
Yep.
The way you do anything is the way you do everything. So why was that maybe your favorite quote that was listed?
It's a quote I heard actually early on in my career at ICS, and maybe the timing on it was just right. Interestingly, and I don't know if you're a Pelotoner, but my favorite Peloton instructor, Jess Sims, actually says it in almost every class that she has too. So it just kind of feels like it should be mine. And actually, our team just recently celebrated my birthday, and they came up with some Stephisms.
Okay.
And that's one of my Stephisms, is that quote. And my kids would tell you that's a quote I say all the time too. I think it just means that, you know, who you are when no one's watching is who you are.
100%. Yeah.
Right? So the little things, if you could tell a white lie here, you're probably going to be capable of telling a big lie. If you can hide something here, you're going to probably hide big things. So in the little things in life, if you're kind to the barista at Starbucks, you're probably a kind person. You can't turn off and on those types of things. And so I also think just in our work and the details that we put into things, no detail is too small. We think of everything. The experience for our clients, for our partners, is, I think, one of the reasons for our success and why our retention's so high, because people know we put thought into the little things because they are big things.
Well, then I think you could tell a lot about a person by their favorite quote, though, and I think the philosophy that you just described is not too dissimilar to the idea of how you practice, how you play. Being an ex-athlete myself, that was just drilled into me, is you can't come into practice and just kind of, you know, walk around half-ass it. I'll say that half-ass it, because your actual performance in the game isn't going to reflect that. So like you said, when nobody's watching, maybe you're practicing on your own, the level of effort you put in there is going to actually show up on game day. So I love that that's the case. And I just saw that stood out to me as like, oh, her favorite quote. And I was trying to, again, glean as much as I could. The other thing that we gleaned, or I gleaned myself, was that you're an avid reader.
Yes.
Definitely want to ask you, put you on the spot here, a couple of your favorite books, because that's another way we can learn a lot about a person. Yeah.
So this story, you'll be surprised. I'm the only kid in history that's gotten in trouble for reading. Right? Because, you know, as parents, we project on our kids that they need to read every day and how important reading is. So when I was younger, I would take books. This is how much I love to read. What a foreshadowing to how I am now. But I would take books to church and stick the book in the hymnal. So my parents, I thought that they would think that I was reading the hymnal, but really I was reading books at church and would get in trouble for that. So,
so what were you reading at that age, out of curiosity?
I mean, you know, I'm 40, so like Boxcar Children probably, or Goosebumps or something like that.
Goosebumps, yes, I love Goosebumps.
So now I would say reading is a hobby of mine. It keeps me from, you know, living in the social media world and scrolling on my phone. I read when I'm on the treadmill. I read when I'm getting ready in the morning. I mean, I read when I'm waiting. And
do you do Audible as well? Do you listen to books, or do you like
to read?
I
need the book. I need the book, and I love lending books out. So I probably read anywhere from 60 to 70 books a year.
Holy cow.
Don't ask me if I've read a book, though, because I won't remember. I have to look it up to see if I actually read the book. So most of the reading is an escape. So I kind of put the work to rest. I don't read a ton of, you know, business, professional books, but relatively speaking, I probably do read a lot just because the sheer number of books I read. But some of my favorites, and I think a good book is one that you talk about years later.
Yeah.
And that you come back to, right, and read again. So I'm going to ask you a question, put you on the spot.
Uh-oh, no.
Have you ever done an Enneagram test?
No. I have no idea what that is.
Okay, so this is your homework assignment.
Okay.
You're gonna take the test and let me know what your numbers.
Enneagram. How do you even spell that?
It's ENNEAGRAM, I think. Enneagram.
I'll have to look. Okay.
Essentially, you're a number between 1 and 9. And what I love is we take tons of personality profiles, assessments, leadership, all of that, from Strengths Finder to Predictive Index, and a lot of them are who you are at work or as a professional. The Enneagram looks at you holistically, right? So I am, and I'm, I don't like saying this. It's not the number I wanted, right?
Okay.
And usually they say if you cringe reading the description, that's probably what you are.
Yeah,
yep.
Yeah.
So I'm an Enneagram, what they call Enneagram 1, wing 9. So, right, what does that mean?
No idea, yeah.
So it means that I am, at my core, a perfectionist.
Okay.
Which I actually had a colleague come to me after she read this book. So the book is called The Road Back to You. And a lot of these personality profiles, when you read them, the books tell you how good it is to be that number or that profile. This book tells you how to be careful with it, right? Because how can you be an unhealthy perfectionist? It's pretty easy. So I had a colleague come to me and she's like, I just read the book. I'm so sorry you're a 1.
She's patting on the head.
Yes,
Yeah.
And I was like, I know, it's so tough being a 1 because we're just never really content. We're always hard on ourselves. We're kind of the people that me after this podcast, why did I say that? Oh, I'll beat myself up over it for like 2 days because of something I said. So I'm a perfectionist with a wing of being a peacemaker.
So tell me about the wing. I'll explain
So
that.
it's basically like your sub profile or your
Okay.
sub, how you can swing one way. If you're not always a perfectionist, if you have a wing another way, it doesn't mean you're just all day long a perfectionist. So I'm a perfectionist and a peacemaker.
Interesting.
So it's an interesting, and I do think a lot of it just coming with leadership at Innovative Captive Strategies, how you kind of have to have the best of both worlds with that. At home, I feel like I'm more of a peacemaker, just family.
Yeah.
Whereas at work, I lean probably more towards the perfectionism.
So did you cringe? You said this is super accurate. Okay.
So it was the first chapter 1 is this. And I was like, oh, no, okay. I'm probably achiever, which comes later, something like that. No,
we all have like what we actually idealistically think ourselves are,
Yeah.
and then the reality hits you in the face, and you're
Absolutely.
like, oh, actually, that is probably true.
Yes.
Right? Yeah.
So there's, achiever and challenger and peacemaker and perfectionist. And the book, The Road Back to You, helps you be a healthy 1 or a healthy 5. And again, it looks at who you are wholly as a person. So that's a great one. I love Anything by Malcolm Gladwell. And
Yes.
actually tying the podcast and books together, I listened to him on Adam Grant podcast a few months ago. And Adam Grant called Malcolm Gladwell out for every book you write contradicts the previous book you wrote. He's like, yeah, that's what makes me good.
Yeah.
I'm not stuck in my ways. And
Well, so his I guess suggestion is that he's growing from
Yes.
each book and learning and evolving.
Yes.
Okay,
Yes.
so which of his? So I've read Blink and Outliers.
Yes.
By Gladwell. Anything else that you've read?
Outliers is just probably one of my favorites just because, it's just so interesting. Sometimes I think Malcolm Gladwell's books, I just love them, but I don't know at the end if I'm like, oh, this is my clear takeaway because
Yeah.
it does change a lot. But I love his storytelling and the way he uses data to tell a story, which is something obviously we try to do in our business.
I want to add a commentary, if you don't mind, on
Yes.
Blink, because Gladwell is one of the few people I've read more than one of his books from cover to cover. I am the guilty of starting a book and going, I kind of get the gist of what they're saying, and let me skip the next 200 pages and just be done with it. But I've read both of those, and Blink was one. You asked me earlier about podcasting and why I started. The Blink moment when I was introduced to the podcast at the other location, the Venture X place where I worked, the second I saw it, I knew. Like, I didn't have to go and think about it and like talk it over with everybody. It was like, I knew I was going to do that. And so I had the Blink moment where my gut just told me that's what I was supposed to do. And I didn't really think too much about it after
love
that. So
those.
that's why that book has stuck with me for so long, I think. It's because people do have the ability to make decisions in literally a split second. Your intuition kicks in and things like that. So anyways, I just love his books quite a bit. So that was, so we've got the Enneagrams, we've got Gladwell, and then
I'm
maybe
gonna go
take
way
me
left field on you.
yeah.
Okay.
Yeah. Let's go on your wing, right? Is this your wing side coming
It
up?
actually is my wing.
Listen,
See?
okay.
So this is a book I gift to every couple, but there's many versions of it. It's called The 5 Love Languages. Have you read it?
Familiar. I think
What's
it's
your
on our
love language?
bookshelf. Oh,
Do you
geez, we
know?
did this so long ago. Tell me
So
what they are
there's,
again.
There's touch, there's acts of service, there's quality time, there's gifts, and there's words of affirmation. Can't remember.
Man, I don't
Usually
know.
guys want them all.
Yeah,
Yes,
yes.
yes,
Yeah.
I want
I
all
don't
that.
remember specifically what mine was, though, man.
But it's just a book. I think about it so often, and it's not just about relationship with your husband. I mean, I've read the kid version and the work version. Now, the touch at work, that's not really welcome. But to me, what I love about it is that we tend to be kind of selfish in our intentions and motives. But if you can show other people, whether it's love or their strength or how they learn or what their why is, you can build a better relationship than people consuming what you are.
Yeah,
Right? So sharing what my love language is isn't important. I want to know what theirs is so that I can show it that way. And that's how you build relationship and trust. And it's a great book for couples, but it's a great book just in general, interacting with people.
Yeah, I know we were venturing down this path in the chit chat beforehand. I want to make sure I ask this question. So you said you just discovered kind of what your why may be recently.
Yes.
How recent did this epiphany happen?
I'm like a week and a half into my why.
Okay, so we finally discovered our why. So please tell me how I
Yes.
fully flesh this out. I'd like
What's
to hear your
funny is
discovery.
the why actually, it was probably like that. It was like, oh, of course it is. So it's called a YOS. It's an assessment that we took through work, and there's 9 different whys. And my why is better way, meaning there has to be a better way to do something, and it's about continuous improvement. It probably ties a little bit into my perfectionism Enneagram,
Yep.
but my why is always making things better and not being okay with the way things that have always been done. And so a better way to communicate, a better way to show this, a better way to tell the story. And Sarah, my colleague, is here. And so I'm not going to look over at her because she's probably
Don't.
nodding.
Yeah, she's listening intently. I can see in my periphery right
yes,
now.
I can see.
But so I want to make sure, because you're talking about a perfectionist and there's always a better way, but that kind of butts heads sometimes, right, in business, because what do they say? Perfection is the enemy of good, or I forgot exactly what that term is, but it's like you can go too far where you over tinker and you end up breaking, and
Right.
sometimes good to do something is maybe the best path to go down. So how
Right.
do you stop yourself from going too much into the perfectionist world and never letting go?
I have to have people like Sarah and other colleagues tell me, Steph, A- is okay.
Yeah,
we got to
A-.
move forward. We
Yeah.
got to move forward. And the better way isn't necessarily always constantly changing. There is a point where you have to say, all right, we've got to move on with this. It's A work. It's A plus work. We have to move on. But it can be hard for someone like me. But that's why you need a good team behind you with different strengths,
Yeah.
different whys, kind of pushing you and working with people that will push you and challenge you as well is
Well,
what
I
you
agree,
need.
I agree. It's a fluid spectrum, right? It's not perfection, and then it's just like nothing at all. There's somewhere in between that's the right sweet spot. But for me, it's like you don't get stuck in the rut of we've always done it this way, or it's good enough, or you just kind of compromise and are content. But you do have to actually take stock sometimes and go, you know what, we did a really darn good job
Yeah.
on this. Like, that's good, or really good, or great, or never going to be perfect. When I do my software demos, I make sure to emphasize this is not a perfect piece of software.
Right.
If you would have built
Right.
it yourself, it would have been a little bit different than
Yes.
what we did. My goal is to make it great, or at least obviously superior to what your current process is, but it's not perfect. And it will never, software, literally Facebook is not perfect. Instagram,
Right.
15 years are not perfect because there is no such thing in software as perfect.
Absolutely.
Yeah. So
Yep.
that just helps me if in case something doesn't go exactly right. It's like, hey, it's just not perfect,
Yeah,
right?
gotta move on.
So let's get into innovative captive strategies
Yes.
now. ICS, we'll make sure we say both, but
Yes, so many
ICS is
acronyms
easier. Yeah,
in
so
the-
many acronyms. But ICS, I want to go into captives with you a moment first. How did you actually get interested in captives in the first place? I think that'd be an interesting story.
So full disclosure,
Yes.
I didn't know anything about captives when I started at Innovative Captive Strategies.
That's all of us in insurance, though.
Well,
We all
right,
start that
does
way.
any kid dream of being in insurance?
Some weirdo.
Some
Weirdo
there might
does,
be one,
but
there
not
might
me.
be one person.
Yeah.
But it's interesting because I've really never dreamt of being in captive insurance, but I do feel like I have my dream job. So I actually, I hopped around a little bit. I probably had 3 jobs in 4 years right out of college. And my most previous employment to ICS was I was planning events and traveling all the time. And I loved the travel aspect. At that time, I didn't have kids, so cool to travel to all these great places, but it was just a lot. So I actually started at ICS as an event coordinator. So
Really?
I planned
Okay.
events. So I didn't know how to spell insurance. I knew nothing about insurance. I had a marketing degree.
Yeah.
So I started there, and within a few months of working there, our then president said to me, "You need to be in sales." And again, I didn't know anything about insurance. I didn't even really know what that meant, but I loved that he saw potential. So I just
sure.
went with the trust and went forward with it. And at the time, if you wanted to be in sales, you had to be well-rounded in all aspects of the business. You couldn't jump in sales and sell something that you didn't know a lot about. So I spent a couple years in service learning about the program management side of our business, the risk management side of our business, the finance side of our business, consulting. So we're talking about employee benefit captives today, but at that time, we didn't even have employee benefit captives. So I actually worked on the property casualty side of our business.
Okay. And that's where the ARM acronym comes
yes.
from, right? What did you say that stood for again?
Associate and risk management.
Okay. That
Yes.
makes sense now.
Probably don't flex the ARM muscles.
You don't do the
very
arm, you don't
much
flex
in
the arm, right?
employee benefits. But yes, it was from the property casualty days. So I spent quite a few years in property casualty sales. Really felt like I was, hitting my stride and finally feeling confident about, my role and the value I was adding. And then we decided to try employee benefits because for us it was, okay, we have property casualty clients. They understand what a captive is. They understand the risk side of it. They understand the opportunity. They'll make great fits for employee benefits. And so us property casualty sales people tried to do employee benefits, and we managed. We actually this week celebrated the 10-year anniversary of our very first captive called Wealth.
That's great.
Yes,
Cool.
on May
Congrats.
1st. That was it's our firstborn, we like to call it.
Firstborn, yeah.
There's been 13 more kids since. So we started that first captive in 2012, and I think we underestimated the pain on the employee benefit side and the desire for employers to have something different, an alternative solution. They were kind of sick of renting their insurance, and we'll talk about how we use this rent versus own analogy when we talk more about what a captive is. But we underestimated the pain, and we underestimated the interest and activity. So I did a hybrid role for a couple years, and there's a reason why producers don't have both licenses.
Yes, I've always, as a naive, prior to getting into insurance and benefits, going, why is there a property and casualty side of the house and they don't talk to the EB like what is insurance, right? And I never quite understood why they were completely separate things altogether.
In theory, it's great, right? If you knew both, but working both sides of this and being kind of unique in that, the depth and breadth of knowledge you have to have, the vernacular, the jargon, the complexities. The same term means something different on both sides, even though it's insurance. Yeah. And so I can understand now why going through both, because the learning curve, it's like learning a second language, how it's easier to learn a second language when you're younger. The older you are, the harder it is. I can see why that is, because I was learning a whole different language. So,
well, yeah, I think it speaks to, like, I have friends sometimes are like, hey, I need to get health insurance. Can you help me out? I'm like, that is completely not what I do, and I wouldn't be able to tell you at all. But they just associate insurance or just health insurance with what I do, or employee benefits. If somebody asked me a question about a life or disability claim, I'd be like, I have no idea. You ask me about stop loss all you want, entirely different language, entirely different jargon, and like you said, you got to go very deep into that one thing to be good at it.
Absolutely.
I don't have enough capacity in my brain to do any of those other lines of coverage well.
It's hard. So doing the hybrid role. Anything hybrid is always tough because one side, you're not giving obviously 100% to one side. And that's me. I want to go all in.
You have to go 100%. Yeah.
So I ended up, and this was probably for me the biggest career change because I had hit my stride and now I'm taking a hard right into uncharted territory, a lot of unknowns, building a team, having goals that are on your shoulders. Did you embrace the sales transition? Did you find like, this is what I should be doing? Yeah. Loved it because then it was not taking someone else's script from what a property casualty captive is and creating our own. And I love that stuff. I love coming up with what's the story, because I actually never use the word insurance when we're talking about captives because it is a story. It is a conceptual buy. We're not selling insurance or selling a product. We're selling control. We're selling opportunity. We're selling stability. So you can't tell a story when it's all tied to numbers and metrics.
Well, you can go into the mechanics, and there is a time for that, important. Right? But I think that telling the story, taking them on that journey of what it's going to look like to go from fully insured or whatever their situation is today into a captive, kind of how it works, some past experiences of employers, what their psychology is probably like thinking about this. And then you can go into, well, this is actually how the finance works at some point. But if you start there, you're probably going to lose them because it's so technical and probably a little bit boring, a little bit to a degree as well.
No,
stop loss is boring. I know that. Yeah.
No, but captives are as fun as insurance gets.
Yeah.
So
just they're a riot, right? They're such a riot that I've talked about it 3 times already on the podcast in the first 40 some odd episodes. So captives, I've had it explained before. For anybody that maybe this is the first episode they've listened to or they haven't heard those other ones, explain a captive in your own words. I'd love to hear it.
Yep. So we joked, actually, I met an old college friend last night that I hadn't seen in like 10 years. What exactly do you do? That's the $1 million question. So I personally like to describe captives as what they aren't before I talk about what they are. I think there's a perception that captives are a way to pool your insurance and pool your risk with other companies. And at least in ICS's model, it's not just a group of companies coming together to form a captive. It's a group of highly vetted, best-in-class companies coming together to operate like an insurance company. A captive really isn't, the structure of a captive really isn't revolutionary in nature, actually. I mean, what we're doing is taking exactly what insurance companies are doing with your dollar, and we're doing the same thing. So it's not this, aha, new structure, no one's thought of this before. All we're trying to do is model what the insurance company does. And we all know that the insurance company tends to make a lot of money. So how can we be the ones that are able to be opportunistic with our dollars?
Yeah.
So I like to describe at least the structure. So getting into, the structure of a captive, I like to use the 3 layers of what it is: the mine layer, the ours layer, and the theirs layer.
Okay.
But before even getting to that, think about being fully insured, right? We liken fully insured to renting your insurance. So I was talking to my college friend last time. Remember when we would rent our apartment, right? We'd pay rent, and if we took care of the apartment, did they give us any money back? No. Our rent, just what happened next year?
Went up.
Went up, right? So that's what health insurance, buying fully insured health insurance is like. It's renting your insurance. And that layer is theirs. We're giving that money away. We're transferring our claims, we're transferring our risk, we're transferring our opportunity to the insurance company. That's the one layer, theirs. When you talk to self-funded groups, or when you're looking at a self-funded group, there's another layer. There's the theirs layer, right? We're still transferring risk, we're still transferring opportunity, we're still transferring claims to an insurance company, but we've introduced the mine layer.
Okay.
Right? So most self-funded employers become self-funded because they want the mine. They want the opportunity. They want to win. They know that I'm going to be better off long-term if I have the opportunity to win versus renting my insurance. What the captive does is it introduces the ours layer. So we have the mine layer, which is exactly like being a self-funded group. We have the theirs layer. We're still transferring catastrophic risk, but the ours layer sits in between the two.
Yep.
And the ours layer is where we can spread the risk, where we can achieve stability. We also have opportunity in that layer because if our group, our captive, performs well, we can distribute that money back to the members. So what I love about the model is that it attracts fully insured groups that say, all right, now I'm going from passing it all away to now 80% of my cost is variable in claims. And it's also very attractive to self-funded groups because they get the same benefits of having that mine layer, but now they get another layer with the ours layer that they get to capture back some of their fixed expenses. But also, and this is what I think is sometimes undersold in a captive, is the peer group support and sharing that takes place with being with other like-minded companies, learning from them, best practices, success stories, or even better, lessons learned. You know, when members share those stories, so that's what I love about the structure is that it attracts both fully insured groups and self-funded groups.
Well, so before I comment, and I agree with you on the the notion of best practice sharing, and that's one of the things that I like about the captives. Did you come up with the mine, theirs, and ours
Sarah,
analogy?
did we?
Because it's brilliant, and I'm wondering if that I wanted to give you credit if
Yeah.
you guys came up with it.
I think so.
Or allow you to cite your source if it was somebody
Yeah.
else. But the reason why I think it's brilliant is because you've literally dumbed it down to a level of a
Yes.
2-year-old, right?
Yep.
They understand mine.
Right.
They understand theirs.
Yep.
And sharing is something we're teaching, right? The hours layer. And so
Yep.
being able to distill it down to that basic of a level,
Yeah.
like I immediately go, oh, that's brilliant. So good job.
Thanks.
Like,
Well,
fantastic.
And part of why I love the storytelling and dumbing it down or using layman's terms is that captives do get a bad rap for being complex when they're really not all that complex. You just are getting a peek behind the curtain that you weren't getting before.
Sure.
And I love taking the technicality and the insurance out of it and painting a picture of it really is simple when you think about it in these terms. So
Good.
it
No,
resonates.
I mean that's.
Yeah.
I'm probably going. I'm not going to borrow. I'm not going to steal.
Go
But I
for
think
it.
that's it's a brilliant way to describe it, and it's exactly right. Like you think of the layers and some of the technical names of the layers, and you've got your floating layers, and it's just like
aggregate.
mine, theirs, and ours is in between. That's super simple to
Yep,
understand.
absolutely.
Awesome.
And
This podcast is sponsored by PlanSite. PlanSite is a technology for employee benefits brokers to more efficiently manage their RFP process for any group size, all funding types, and over 20 benefit lines and point solutions. PlanSite is the only end-to-end RFP technology on the market today. Let's modernize your RFP process together. Check us out at plansite.com.
Now I'd like to get into, some of the special sauce for ICS or innovative captive strategies. So talk to me about the actual mechanics. We do need to go in the weeds a bit.
Yep.
So structure, the different cells, domiciles, and things like that. Well, let's do some of the jargon
yes.
stuff.
Yeah, so really, I mentioned earlier that the structure itself isn't, entirely revolutionary. And the structure, each captive. Actually, we have 14 captives, so even within our own captives, there's variability in our structures.
Okay.
What I love, and we'll get into likely what makes ICS captives different, but it's the member decision. Right? These are member-driven, member-controlled captives. So if we're taking, for example, a floating retention, so that hours layer for most of our captives is a floating retention. It sits above their self-funded layer. That amount, whether it's 200,000, 300,000, 500,000, is voted on and controlled by the members. So our job is to bring the options, the analysis, sometimes a recommendation, but at the end of the day, the members are voting on how much risk they want to take.
Interesting. Okay,
Yeah,
cool.
so
So
I love
they get like almost like you're owning stock and you have a vote.
They get a vote.
Okay, cool.
One member, one vote, and that is very unique to ICS's model. Is that these are member-driven, member-controlled captives. They're voting on things from which carrier are we going to work with, right? Who's going to be our theirs partner?
Yeah.
How much risk do we want to take on the structure? Do we want to require organ transplant coverage? Do we want to have a no new laser contract? Do we want to go to Savannah, Georgia for our next member meeting? They're literally voting on all of those types of decisions. And if you think about insurance, most employers would say, I have no control over my insurance. And imagine, being your second or third largest business expense and not having control over it. So that's when I say, when someone joins a captive, they're not buying their insurance. They're not making the decision to buy the captive product. They're not making an insurance decision. They're making a business decision. Mm-hmm. And when you're making a business decision, you want to have control over those types of decisions.
Well, it's not even just control, it's the visibility that you don't have, you lack of visibility, I should say, with being fully insured as well. So, with the captive, right, it's really a transparent model altogether. You're voting on all these things. Everybody's privy to these decisions. All of those moving parts are visible to the employer, which is the exact opposite, right? When you're fully insured, there are circumstances, of course, where somebody's maybe better off fully insured, or they make a business decision to stay fully insured for whatever reasons. But the inverse is kind of what you're getting in a captive arrangement, which I'm attracted to just from a self-funded and stop-loss guy by nature. This vehicle to transfer risk or to become an insurance company, essentially, like you said, is very interesting to me.
And not to get too much into the differentiators, but I would say in general, captives are more transparent than other traditional models. But ICS's captives, one of our differentiators is how transparent we are. So I start, maybe it's just the way you do anything is the way you do everything.
Yeah,
quote.
There you go. Bring it back.
Our fee, for example. So ICS, our fee is transparent when they join the captive. We get paid a per employee per month fee based on their enrollment. Most captive consultants are charging a % of premium on the back end. Well, what does premium do? It grows. Yep. So we believe that if we're going to be transparent, we have to be transparent from the beginning. So it starts with our fee. But that really is just what sets the tone for transparency in general. We don't share just aggregate performance information. We're showing the members how each of their partners is performing. And so a lot of times when we tell people that, whoa. So what happens if I'm not a good performer? What happens if my name is on the page and I'm costing the captive money? Well, the reality is everyone's going to be that person. If you're going to have bad years, if you haven't been in the captive long enough. So everyone knows that everyone is going to have bad claims years. But what we're also transparent about is what are you doing to influence your claims, right? Do you have cost containment strategy in place? Do you have a pharmacy strategy in place? What's your incentive strategy for your employees? How are you communicating? And so there's scorecards that members are seeing of each other. So our captives aren't a good place for bad performers to hide. Okay. Right? We don't have a model where someone can just kind of fly under the radar.
Well, I assume there's not any shaming going on, but is there a little bit of like, hey guys, why are we not doing?
I call it friendly peer pressure.
Okay.
Everyone knows that health insurance claims oftentimes are uncontrollable, right? And that's what the captive is set up for, right? For those unexpected claims. Mm-hmm. And there's things we can't control, but we like to focus on the things we can control. We can control our plan design. We can control our communication strategy. We can control how much risk we're taking. We can control our incentives, right? That drive behavior.
Yeah.
We try not to focus on the things we can't control. Premature babies, a lot of cancers, right? That's what the captive is built and set up for. What we use the transparency more for is not for shaming or for pointing fingers. We tend to use the transparency information more for who's doing it right, who's performing really well, what's their secret, what are they doing, and then we pull them in to share with the rest of the group what they're doing. And that is, again, I said it earlier, just the undersold value of the captive is learning from other best-in-class companies. What are they doing? But what I love even more, it just kind of gets bigger and bigger, is it becomes not about insurance at all. It's business, right? It's not about what the technicality on the plan design language. COVID is a great example of this. The amount and the value that employers learned on how to navigate COVID largely came from their partners in the captive.
Really?
Yes, whether it was, what apps are we using to communicate with employees because they're not in the office anymore, to what are going to be our standards around vaccinations, or how are we going to test, right? Where everyone was trying to figure it out, they were leaning on each other in the captive to figure out what were some strategies that they could borrow from someone else who was doing it right, and what can I take and learn from that? So you start learning from other companies, and it has nothing to do with insurance, and that's what I love. I mean, that's the joy that I think ICS gets at a meeting is, we spend so much time prepping for these meetings, like months and months, content, the details, right? We want them to walk away and feel educated and find the meeting valuable, and we're always trying to one up what we did before. But it's inevitable that at the end, when they're telling us at the survey what they liked, what they didn't like, it is always what they liked the most was not ICS sharing the performance and renewal information. It was the members that are sharing not just the success stories, not just the best practices, but when they're vulnerable and get up there and say, this didn't work.
Yeah.
Right? Or, hey, this was our email to employees. This was our communication. I can't tell you how many times. Can I just just slap your logo on it. There's.
Well, what I like about everybody they've talked to that's in and around captives loves captives. Like, you guys are enthusiastic about this. It's like, it's not a best kept secret anymore. It's not like it's a secret, but once you get in, it's like you're in for life almost. And then you just believe in it, because I think the belief is genuine though, right? Like I don't have to discern whether or not you're being genuine about what you're conveying, nor is it truthful, right? Because I believe with that openness and transparency about what you do, that just comes across when you talk about it, right? So I feel like I'm missing out almost.
I know, right? Like,
I'm
join the
tangentially
club.
related
Join
to
the club.
captives. I need to get in the captive club.
What's funny about it is that almost, I would say 90% of people that join a captive are doing it for the financial benefit, right? They want, it's financial. They want the opportunity to win.
The other 10% want to go to the Caymans. Is that
the trips?
Yeah, the trips. Yeah.
Some just want to do something different.
Yeah.
Right? They're just so sick of being on the hamster wheel that just doing something different is attractive. But when you ask a member who's been in for 3 to 5 years, the best part of being the captive, because the financial benefit is just such a given and built into the program, like, you're financially you win.
Yeah.
What they say is, I love what I've learned from the other members. I love being around the other members in these best-in-class companies. So it's just,
it's just not like they're only talking insurance at these events either, right? It's like, what are you doing business-wise, or ideas, right? Or what's happening in the marketplace? I mean, I think the fact that you get kind of sort of like-minded employers that are looking for best-in-class solutions all together in one place to talk to each other, and they're used to openly sharing about their insurance. I'm sure there's probably some deals that are being struck occasionally, and that's kind of fun. I do like the idea of the rising tide lifting all boats. I think I've probably mentioned that on multiple podcasts, is because it's not zero sum. You don't have to hold everything close to the vest. You can share good ideas. It does actually improve the overall health of the marketplace at the same time, but you guys do it in a way that's a little microcosm of the bigger marketplace. And I think that's really, really cool. Now, I do want to talk about the right employer for a second. So who is the best fit for what you guys do?
Right. So if you're kind of looking for that ideal captive fit, we try to break it down into the 2 things that we're looking for, right? One are the quantitative characteristics. I will say those are less important. It's what people want to know, right? What's the size? Is there a geography? Is there an industry? Is there a premium amount? And there are, in theory. So our floor is 50 covered employees, and that's pretty black and white. And then what's a little gray is the ceiling. So we see anywhere from about 50 to 1,000. I would say that sweet spot is 150 to 350 enrolled employees.
Can I talk? This is not the first time I've heard that 1,000 kind of seems to be the top threshold. For me, a non-native captive person, that seems like a really huge group to be in a captive. Right. So how does a really, I would say on the larger end of the spectrum, employer still benefit from a captive?
Well, first, they don't lose anything, right? So they still are able to capture their self-funded opportunity, and the risk is relatively the same. What they gain by being in the captive is they have obviously additional, what were stop loss premium dollars that are now going into the captive, and the floating structure allows us to attract to larger groups.
Okay.
If it was a fixed retention, it would be harder to
Can you
attract.
explain the difference? I want to make sure you
Yes.
explain the difference.
So let me use an example. So let's say you have a group with a $50,000 self-insured retention, and then there was a fixed retention of $300,000, right? So the hours layer becomes $250,000
Yes.
above their specific deductible. Well, if you're attracting a 1,000 life group, they probably have over a $300,000 deductible. So they really can't benefit from being in the captive. But because we have floating layers, if they had a $300,000, let's say they had a $300,000 specific deductible, the captive would sit on top of that for $300,000.
Okay.
So they're really not purchasing.
So the margin itself is what floats on top of their
Correct.
own spec. Interesting.
So
Okay.
it basically, what it does is it kind of attaches to each group. So it can make sense for a $50,000 specific deductible and a $300,000.
So somebody that's not in the captive space that's arguing 1,000 life group should just be self-funded on their own. What argument are they making against them staying in the captive then, out of curiosity?
I would say, I guess there is a relative, it's very relative, but there is a small extra risk if the captive as a whole doesn't perform well. Not even them specifically, but their risk standing alone is higher because if they have a bad year, they're going to take that stop loss premium increase. Whereas in the captive, they have the additional, even though 1,000 is credible, they have the benefit of having 10,000 lives and being treated like a 10,000
Well, so
life.
has anybody ever come up with a cell that's specifically dedicated to very large employers and have a jumbo employer captive or anything?
I'm sure, and we've talked about that. It's our
Everyone wants to sell a 10,000 life group anyways, but
well, what you hear way more often is a bunch of 20 life groups, and that's actually a lot harder.
Yeah.
So the mega captive idea is probably even a little bit easier than the 25 life group that everyone wants because they have a ton of pain.
When I derailed you, and I'm sorry, we were talking about the size segment that's
Yep.
the most appropriate. So 50 on the low end,
Yep.
maybe 1,000 on the top end, sweet spots 200, 150 to 250, somewhere in there.
yeah.
Okay. What other things about the
Yes.
employer profile?
So that's where I say those, that's kind of a given, right? And from other quantitative, you want to find a group that is typically a better than average performer, right? If you're looking at a group that for the last 5 years has over 100% loss ratio, we would say you keep renting your insurance.
keep
You're getting,
doing you.
you're getting a deal. But if you're a company that is making the insurance company money, you're probably a good performer. And it doesn't mean, so there's this, again, misconception that, so I bet you like young IT companies. We do, but they generally don't tend to drive premium, right? And they tend to be pretty well taken care of by the insurance company because they don't want to lose them.
Mm-hmm.
We like the groups that have had some hair, that have experienced those bad years where they've received the 20% increase and are now living with it, right?
Yep.
So they had a bad year a couple years ago, they got a 20% increase, and now that's their new baseline. Those tend to be, actually better fits for the captive because they've felt the pain. And they're the ones looking for, hey, I'm still living with this 20% increase, even though this person isn't even on my plan anymore.
Right. Yeah. That's what I always, and from the stop loss world specifically, you start layering on all the features, no new lasers and rate caps, and you start changing all the levers to really experience rewards, and you start getting all this premium baked in on the front end, and then you have a bad year, like you
Right.
said, and then all of a sudden now I have the new baseline where I'm starting
Right.
from at a much higher baseline than before.
Yeah.
Same thing happens in fully insured, and you can't pull that back,
No.
right? You can't go to that fully insured carrier and say, hey, no, my big risk person is gone, re-rate me.
Yep.
They're like, no, you're here now, and good luck.
Or you're gonna have to change carriers. Who's gonna
Right.
reset your baseline.
Right.
So
And then you
become
do all the disruption,
and all of that. So we always like to say, so when you perform bad, you get the big increase. When you perform well for the insurance company, you just get a less worse increase.
Exactly.
Right? So you're looking for companies that have had good years and bad years, but typically better than average performers. What is way more important to us, and this could be more specific to ICS, is the qualitative characteristics of an ideal captive fit. Somebody who's thinking long term, right? So not who's, again, the spreadsheet, the cringe-worthy word for any captive
I know. I have to
consultant.
say
Yes.
it in my job, and I do
know.
cringe at even having to
Yes,
say it myself.
It's so hard. It's apples and oranges, so you can't put it on a spreadsheet. But people that are not, and when you look at a spreadsheet, it captures a 1-year snapshot. And oftentimes the captive looks more expensive, but it could be actually a better option from a cost standpoint.
sure.
But you really start to see the benefit of it, years down the road. So somebody who is thinking long term, who again is treating this like a business decision. So we don't want people to join the captive, or we don't want people to not join the captive because we're priced a little bit higher. But we also don't want people to join the captive just because the price is lower either.
Sure.
Right? Because then the motives and intentionality around joining the captive aren't what we're looking for. We're looking for entrepreneurial companies. They tend to be privately held. They tend to think long term. They tend to want control and a voice and a seat at the table. They tend to have better than average cultures. So these people aren't trying to save a quick buck for their cost and screwing their employees in the meantime. They're wanting to enhance benefits or maintain benefits, provide stability for their employees. They don't want to shift costs to them. They don't want to reduce benefits. So the culture and engagement of these captive members is important.
Well, it sounds like just good, solid companies, right?
yes.
At the end of the day, like, that's a good company. You
Yeah.
mentioned cultural. Obviously, they're probably successful at what they do, sell, service, goods, whatever. But just a good, solid company is going to be a good partner in general.
Right.
But one thing I like, and I think is not necessarily a new concept to me, but I heard talked about a lot more, is you can actually enhance the benefits while actually reducing costs. I likened it to if somebody starts working out and they want to lose fat and gain muscle simultaneously. It's harder,
Right.
but you can do it. But the notion of like $0 deductibles being more common now, or not even having coinsurance, or maybe you're waiving those coinsurance for certain behavioral changes. You can have enhanced benefits to the member and still control the cost. You can actually do a better job at controlling the costs when you have those enhanced
We
benefits.
see that way more.
Yeah.
We see people enhancing their benefits way more. Or as a self-funded employer, they now have control over their plan. So they can craft plan language in a way that they can't when you're fully insured. Or they can introduce programs like a Regenex that that usually isn't covered by a fully insured carrier. But as a self-funded employer, you're not only adding additional benefit for your employees, but you're also, it's a win-win, potentially saving on cost as well.
Yeah. Well, I'm glad you brought up Regenex. That episode's not out yet, but actually, like when Mark said one of the predicates for them to actually have that introduced is they have to be self-funded.
Yeah.
We both kind of like broke the fourth wall and talked to the camera. Like, do you hear that? You have to be self-funded,
Yeah.
But I like that, right? That's where you get the flexibility. That's where a lot of this control comes back to you, as if you are actually taking on this risk, whether through a captive or on your own. And I just love hearing about good solutions like that. One of the things that I did see on your website that's emphasized everywhere, even in caps, the word bold.
Yes.
So why bold? What does that mean? What does that mean within ICS's world as well?
Yes. So I mentioned earlier that I have a marketing background. So I've had the pleasure in the last 15 years of going through 3 different kind of brand refreshes, new websites for innovative captive strategies. And the one thing, even though our logo's changed, our colors have slightly changed, our websites have changed, the one thing that hasn't changed is our tagline of do business boldly. And I think one of the reasons for that is because we really do, and this probably sounds a little bit, pie in the sky, but we really live it. And it's not just about who ICS is. It represents who our partners and who our members are. And being bold is being different. It's being courageous. It's doing things.
Maybe taking some calculated risks.
Yes.
Yeah.
Yep. Doing things in a way that haven't been done before. So we think it's not as much about ICS, actually. It's more about who we partner with. And them joining a captive is a bold move, because it does take a little bit of a leap of faith. We always say, when you join a captive, just similar to when you go self-funded, you're taking a little bit of leap of faith, but you're betting on yourself.
Yeah.
And what's more bold than that is betting on yourself.
Well, I think, the cliche, the fortune favors the bold, but I think it's true, right? There's a right way to be bold. You can be bold and just be brash and,
Yes.
dumb. And that's not what you're obviously advocating for. But I do agree with you. It's a bold step. Like, I want to take control back of my health plan. I want to have visibility, control, access to better ideas, better vehicle for transferring risk. I'm going to take a bold step. If it hasn't worked for 10 years in a row and you've been doing the same thing, well, now is the time to take a bold step. Whether that's a captive or not, I do like that that's part of you formally and what you guys do and yourself as well. Did you come up with this? I'm curious. because
No.
You seem to be good at these ideas.
No, and actually, I go back to the 9 hours there, and I probably didn't make that up either. Again, it's more of the storytelling. I'm
Well,
sure.
we all
I'm sure
stand
somebody
on the
deserves
shoulder
some
of
credit
giants
for this.
before us, right? It's sometimes you want to give credit to somebody and you just can't
I
remember where
can
you heard it.
confidently say that it was a marketing company that spent a lot of time with us, and going through that is difficult in itself. No one's ever going to understand us, and they maybe didn't understand captives, but they did understand that we do things differently and boldly. And bold, it's standing out too. And at ICS, we do everything from breakfast boldly to we have annual pig tournaments on the basketball court. We do buckets boldly. We do biking boldly. We have a book club.
You have a book club,
Yes,
surprise.
of course we do.
Yeah.
Actually not run by me, but I do attend all of them. But we do reading boldly. So it is something that everyone talks about. And so it becomes what I love about from a culture standpoint. Our clients, our partners are all bold, our employees are bold. And so everyone is always looking for the next thing. How can we be better? How can we as a company get better? And that's what I love about our captive members too, is that they don't just get better claims. They become better companies after joining a captive. And we can't even take the credit for it. We have to give the credit to the other members.
Yeah.
They make each other better.
Well, and so as we get wrapping things up, I know
Yes.
we both have planes to catch. I was
yeah.
going to ask you, taking a step back, you mentioned you kind of stumbled in this industry.
Yeah.
You were doing event planning early on, and then finally figured out, well, what this is interesting. Somebody that's young, right? I always want to position at least some of these conversations around, I'm new to insurance. I'm trying to figure out my career in general. What would you advise somebody that's maybe interested in captives or just interested in insurance in general?
Yeah.
Maybe some some wisdom that you could pass along back to them.
Yes, my wisdom at 40 years old. I would say this isn't even specific to the insurance industry. I can kind of do a little take on both. Is just raise your hand, do it all, and do it all well, right? Because, and not to use the quote again, but if you can do the little things really well, people will trust you and start layering on responsibilities, and you can kind of naturally gain more knowledge, add more value to the company. So be the person in the room that raises your hand and tries everything, right? And gets uncomfortable and challenges yourself. I think a lot of people wait for people to come to them, right? And I'm like, be bossy, barge in there, be confident, ask to do things. And if you fail, that's okay. I'm a big effort person. So if I see effort, it doesn't have to be right.
Yeah.
Effort is huge. And so I would tell young people to not sit back and let other people kind of take their hand. Is you go grab someone's hand and ask them to kind
Well,
of
I like the advice of asking questions, right? I
Yeah.
think when you're young, especially you have this fear of not knowing anything, right? Or you don't want to be embarrassed because you didn't understand something. Everybody starts somewhere, right? So I wish I did a better job earlier on of asking questions and investigating what I was interested in. It kind of took me to around 30 before things started to click and my career went in a certain direction, a good direction. But I should have been better at asking questions early on and figuring out maybe I had this introduced to me, the self-funding thing introduced to me by accident, and I discovered, oh my God, this is what I've been waiting for in insurance. I maybe could have discovered it 8 years prior to that if I just asked some questions,
you don't want to look stupid. But what I would even say about that is, if you're talking about insurance, the technical expertise and knowledge is so important, but it does take time. You have to be in it to really learn it. You can't just read a book and understand it. You kind of be patient with yourself. But the relationship aspect, you can start immediately. And this is a small community. Actually, I mean, before we started, how many people did we say, oh, I know them. Oh, yeah, well, this person in common. So treat those relationships delicately because they're going to be around. And most people join insurance for life. So those people are going to be around. Build relationships. Reach out to people. Pick up the phone. That's like my big thing with especially young people that just, you cannot build relationships via email.
Yep.
It has to be picking up the phone, meeting people in person, and really put yourself out there in terms of relationships. I wish I would have told myself that more.
Well, and if you do want to go to the Cayman Islands every once in a while, ask that question too. Last thing I'll ask you is kind of future of the captive space, right?
Yep.
How is this industry evolving? I think there's maybe a lot more players that are popping into the space. For sure, it's becoming more popular. But the evolution of the actual captive idea itself, where are we going here?
Yeah. I mean, certainly there's more players, right? 10 years ago, when we were talking to groups, 1 out of every 10 might have had another captive in the door or knew about captives. Now it's probably 50-50. 50% of the time we're up against another captive. So there's more players. There's also carriers that are starting to say, I'm losing my best groups to self-funding or the captive. So they're starting to develop products and solutions that are disguised or look and feel like a captive.
Okay.
And just, anything carrier product probably benefits the carrier. So making sure you're kind of looking out for some of those things. So that's a big change in the marketplace, is that there's not even just more captive consultants out there and more captives in general, which we welcome that. The rising tide raises all, I mean, that's the same thing. If there's activity and momentum, that's a good thing. More people are more comfortable with captives than they were 10 years ago too. So we love that.
I'm happy I have competitors because that
Yes.
means people are coming around to the idea of
Absolutely.
RFP software. If I was the only one beating that drum in the marketplace, I'd have to do a lot better job of educating.
Yep.
But now this this space is emerging and there's other people in it. If they're successful, we're successful. It's not like we're
Exactly.
taking from each other because the marketplace is so
Plenty of
vast.
opportunity.
Yeah.
Yes. More products. And then the other big thing we kind of a little bit talked about is just you're seeing more self-funded groups be attracted to the captive concept. And so those two things, I think, is where we see a lot of the space moving, certainly. But yeah.
Well, that's awesome. So closing thoughts, the floor is yours. Sarah, did we miss anything? No. Okay.
Sarah, did I do all my Stephisms?
All your Stephisms, yeah.
There's some more.
There's some more, but thank. I know it's hard to sit here for an hour and be quiet, so thank you. Kudos to Sarah. So I just want to give you a chance to leave anybody, even you have a message to kiddos, whatever you want to say. The floor is yours.
Oh my gosh, I can say hi, Gus and Murphy.
Yes,
Their mom's not famous, but
And Gus is the one leaving, and Murphy's the one staying in the basement, most likely. We'll see if that comes to
We'll see if the
fruition.
predictions are true.
Yeah.
And appreciate you. I love this. Has been fun.
Thank you for the travel. I know you're here for other reasons, but appreciate you making time. Nice to meet you.
Thank you.
And talk to you soon.
All right.
Bye, Steph.